RedFish is dedicated to small, medium enterprise, is approaching the market through a system of investment holding. And we have actually three investment holding. One is dedicated, is innovative RFK, is dedicated to innovative companies, technology, and high risk with a technology approach. Then there is long-term capital, that is the focus of the actual presentation, that is dedicated to the family business, Italian family business that want to spread out Europe and make acquisition through Europe. We have industrial companies, we have service companies, and actually the holding is well diversified. All these companies are listed. The last one is dedicated to the companies that make IPOs and go to the market. So they are less risky company with a higher profile in terms of capability to be to continue their business. While the value proposition of RedFish for the long-term capital, so the invested industrial holding that we will present today, is to support this family business to make acquisition and to grow through Europe, making M&A, and eventually to go later on the market with an IPO. We have in this holding a capitalization of about 30 million. That is far away from the net asset value, that is about 45.9. So we now are on the market with a great discount of the shares. So it's an opportunity to acquire our company that is based on a solid business. We'll grow a little bit through the single business that actually make the portfolio. If you can change the slide. Thank you, Matthias. This is our track record of RedFish. You can see that we have an extraordinary performance on a single base. We invested in 2020 in Matic Mind, and we invested 5 million, and we had an exit after 2 years of at about 12.5, with a 2.5 multiple and a fantastic IRR. This company was focalized in ICT, in particular, it was the Italian leader in cybersecurity. And as everyone know, there was a hype in cybersecurity. So we decided in 2022 to accept a great offer by CVC Capital Partners. This is a giant private equity that evaluate our company very much more than our entry strategy in 2020. All these company usually we invested at a very conservative multiple. In this case, Matic Mind was bought at 6x EBITDA and was sold at 12x EBITDA to CVC Capital Partners. Then we had an experience in medical equipment. Inventis had a similar history, was a little champion in his sector. And we had another experience in infrastructure. Autovia Veneti is a highway maintenance player. And we have other example of exit with excellent IRR. At that time, we were acting as a single player in a single investment in the so-called club deal approach. We changed in 2020, and we decided to establish investment holding. This kind of system of investment holding they presented you in the slide before allow us to approach every deal single by single, but to give to investor a lower risk approach because it's spread away, not single investment, but is in a holding. And together with the holding, we have an evergreen fund because it's listed. And so the investor can make its exit strategy independently from the strategy of the single business. If you go through the slides, thank you again. Perfect. This is our track record in terms of holding that started in 2020 after the single deal. And we have a growth of net asset value and equity raise. We grow through capital raise each time that we have an opportunity, and we will see the next line that we are just closed a new deal, an industrial company that is called Polyeco Group, that you see in this slide in the last row. In the current portfolio, we see Convergenze, that is a telco company, a local telco company in the mid of Italy, is very, very focalized on the regional expansion and is very stable. We invested in this company in 2020 during COVID, where there was a very high growth of use of internet because they make a cable access to internet for householders, private people, and small companies. So this is a company that had a very high growth during COVID and use the remote working as a contest for growth. They make also little acquisition. So the approach of RedFish, the entry of RedFish in Convergenze, had the manager to make acquisition. This is our main role as RedFish LongTerm, to support some leader company, as we see the others, to make not just internal growth and organic growth, but to add M&A to their strategy. Tesi is a manufacturing company in the aerospace arena. Is a leader in metal works. SolidWorks Group is a leading Italian company with 60 million of turnover in 3D digital system integration. In this case, I will say that both Convergenze and SolidWorks, we helped them in acquisition, but also to approach the market. In fact, Convergenze and SolidWorks are now listed since 1 year and a half in the Italian market, so the investor can see directly the presence of this company on the market. But we invested 1 year before. So our role is also to take this family business company to the market and make them grow with the capital of the market. This is a strategy that allows our investor to assess 1 year, 2 years before the entrance in the market of the company to a special price. For example, SolidWorks, we invested on 1.4 euro. Now the company when was listed at 2 euro after 6 months that we entered, and now it's about 4 euro. So for our investor, it's 3 times the price of entry. For the one that entered in IPO, was just 2 times. S.p.A is a player of chimneys that is in Italy. We are helping them to grow in Europe and the presence in France. In Spain, we just bought in England, and we are approaching the German market. So the idea is to make S.p.A is already a leader in production of stainless steel chimneys and in Italy, and now we are helping them to enter the other market. The scope of this company maybe will not be to be listed because the owner is 70, and maybe there will be a normal exit. So our strategy of evaluation and create value can be variable depending from the entrepreneur, depending from the scope of the company, depending on the market. For example, Movinter is a company that is based as a carpentry focalized in rail sector, where is full of certification to be a player in rail sector. In this case, we make another acquisition of 6 Italia that is an add-on of Movinter. This is specialized also in railway, but insulation and acoustic products. It means that is together is a diversification in production and in products, not in geography, as I described you for S.p.A. So in this case, the strategy of growth will be to support Alstom and Hitachi and other main players that are making trains all around the world with professionalities certified in different manufacturing processes that can join together, adding value and make assembly products within metal and insulation products and maybe electric parts. So we start to provide a finished products that had value and EBITDA margin is higher. Then we had Pure Labs. This is an aggregation of a laboratory of diagnostic. So we enter in life science because at the scope of RedFish is also to give a diversification of risk, because the landscape of the future it will be more like the last 2 years, full of risky. Before we didn't have higher interest, we didn't have inflation, we didn't have any speculation of materials, we didn't have credit crunch. So to be established in a different business give also a lower risk to our investors. So the scope is to invest in a holding. The scope is also to diversify the risk, even if instead of entering the single deal. Pure Labs, as I told you, is in life science. Everybody of you knows that especially diagnostic sector is very stable, is acyclical respect the crisis, because it depends on the health and the maturity of the people of a nation. So the future of this company that is growing very much is an investment of last year, but we already made 2 add-on in the last 6 months, and we will continue with extraordinary growth, with doubling the turnover in the present year. Polyeco Group is the last combination that we are doing between the capability of RedFish LongTerm Capital to approach family business and Tonelli family, that is actually was the only one owner of this company. Is a 200 million company with about 20% of EBITDA, is cash positive. In this case, this family were looking for a player able to support them in M&A and eventually IPO in 2025. Our history selected us as the preferred partners because we have an history of M&A, we have an history of great IPOs like Solid War from €2 to doubling in 1 year and a half. And so we are the perfect player for the combination. What we asked to Polyeco, we asked to Polyeco family to enter at a specific and a great multiple. That is 4.5. So to enter at 4.5 times EBITDA in a 40 million EBITDA company, cash positive, is what we offer to our investor. Because we know that the market, then we recognize that this multiple is very, very discounted. And so this is how we make 100% of increment of our value in 2 years. Because we buy a special price and we give help to the families to grow in M&A and internationalization. For Polyeco Group, in fact, the aim for 2024 is to make a great acquisition in north of Europe. They already have a presence in Greece, in Czech Republic, in south of France. I will see a little bit more in the detail of the company. This is a player that is making plastic tubes and resins, especially for water treatment, the transportation of water, and resin for the oil and gas tubes protection. This is a great company. There are other 60 players that are in the water treatment tubes. And this is the M&A activity will be on these 60 players around Europe. Why 60 players? Because the tubes are about 2 meters, very big for the water transportation, and is inefficient to transport them over 500 kilometers. So in Europe, this full of small company of 50 million, about the leaders one are 50 million, and Polieco is 200 million. So we can easily acquire this player to cover all Europe, and this will be our main effort to support the family in the European growth. Matthias, you can change. For doing this investment, it will be an investment of about 30 million to enter this company. That is, as I told you, is about a 40 million EBITDA company. We will take a 15% of this company, and we will make a capital raise of 50 million in long-term capital, and we will add other 50 million by single investor in a club deal, where we will be the leader. So we as RedFish LongTerm. So LongTerm as an holding company is also a club deal generator, where it can gain the 20% of plusvalence on the investment of the investor that enter in the level of club deal. So Polieco will be a 30 million club deal. 50 million will come from RedFish long-term capital, 50 million by a single player that will pay a carried interest to long-term. So the people that enter in long-term will gain from the direct investment, also on the leveraging the carried interest by the other investors. The value proposition of the amount of capital, this capital raise for this 50 million, will be diversified on the amount of the invested by the investors. It will be launched at 1.555 euro. That is higher than the actual price of the share, that is 1.48. So we don't disturb the traders, the one that invest in the market, because this capital raise will be at a premium. But to the investor that invest at least 1 million or 3 million, so a very big amount, if they remain in the capital for a period, we offered bonus share. For the simple players that invest less than 1 million, it will be one bonus share up 10 after 6 months. For the people that invest from 1 million to 2,099,000, it will be an extra bonus shares after 12 months. So one bonus share after 6 months, one bonus share after 12 months. And for the people that invest 3 million, exactly, no more, it will be 3 bonus shares. So we will give an extra bonus share after 18 months. So we have the fidelization of the investor, even if to invest 3 million, you have to have a long-term approach, obviously, because we know that the market is finite. We already have 2 investors that subscribed for 3 million. So the best offer we give to the market. So they decided to join RedFish in this long run. This investment of 6 million united to the 6 million that we had in the portfolio at the date allow us to sign the first step of Polieco. Polieco investment of 30 million will be divided in 2 steps. First step of 20 million that will be closed the 8th of March, and we already declared the sign because we had this help from this 2 single investors for 3 million. And then there will be another closing at the end of June. For this closing at the end of June, we wait to define the rest of the capital raise and at the time and with the numbers that I told you. We also think that it will be double convenience for bonus share, but also because at the price of 155 is still away from the value per share estimated by GBC AG in their research that evaluate RedFish long-term capital 2.4. We now know that, and I told you at the beginning, that RedFish is at the discount. In fact, the current ratio of the share is about 1.5, but the net asset value is considered 2.4. Matthias, you can change slide if you have still some time, and you can go through the slide at page 16, where there is some companies. Yes, then we will leave. Okay, perfect. So we now have the company that I described to you. As you see, we implement our growth strategy through the acquisition. S.p.A. acquired in UK, A1 through a system. Convergences acquired Positivo. Movinter acquired Six Italia. Pure Labs acquired Vivo and LAM. Solid World acquired Valore BF. All these companies are in our portfolio in an approach that we consider very discounted. In fact, S.p.A. we entered at 4.8 times EBITDA. Is a fantastic company of 70 million turnover, 9 million EBITDA, fast growing, leader in their sector, spread out Europe, and we think that in case of exit, we will repeat the same experience that we had with our history, and easily we will double our investment. Convergence, I already told you, in the telecom company. Movinter is a special project. As you see, 96% is our majority investment. Usually we enter in minority. So with an approach of helping the family to grow with the approach of M&A. In this case, we had an industry expert throughout our investor that was involved in the railway industry, and he knew this company very well. And so when we enter in negotiation with the old owner, he suggested us to buy a majority. We started from a minority negotiation. We enter in a majority negotiation, but then we realized that the old owner, they were 85 and 87-year-old. It was 2 years that they were not going in the company. It was already managerialized, and there was a big space for aggregating in the sector. Movinter, when we were looking at this company, it was about 18 million turnover. Now we closed the first year at 27 million with a fantastic growth. And with the acquisition of Six Italia, this is about 15 million turnover. We will go over 40 million, 43 million of turnover. This is becoming one of the main players in railway supporting manufacturing. And we will make a third acquisition in this year that will take the group 60 million. And this is, you will see these numbers also in the aggregated numbers of RedFish LongTerm, because as a majority, we aggregated this turnover. So this will be the main numbers that you will see in our balance sheet. I already said something about the other two participated company, and maybe we spend a little time on Polyeco that you will see, but just in the last page, or not the last page, but you can find it. Our team, no, you can stop a little bit here. This is interesting. In the 17th page, Matthias.
17.
Okay, this one. Okay, you can see how is composed the net asset value, where GBC gave his buy approach with an estimated price at 2.4. Our actual price is 1.49. So you can enter RedFish buying the company on the market at 1.49, or approaching the capital raise with a longer time. So a perspective of 6 months, 12 months, or 18 months, and collected bonus share, as I described before. And information will be provided by the GBC, obviously. So as you see, the approach is very well diversified. We have also two companies, Solid World and Convergence, that are listed. In case of Solid World is a recent investment. So as anchor investor, we still have a lockup in this company till July, because when we approach the market, as we are also in the board of directors, in case of Solid World, but also of the other companies, we are considered strategic investors. And so when we approach the market asks us a fidelization for 24 months. But obviously, this is more than repaid by the discount that we have entering the 1 year before. In this case, was 30% discount. So we have 3 times potential exit strategy when the lockup will end at July.
Paolo, I have to stop you there. The time is up.
It's perfect. I was waiting for your claim.
Okay. Sadly, we don't have time left for question, but it was a fantastic presentation. Thank you very much.
If they want, they can write me or have a private conversation, and obviously we will be available for your fantastic investors. And very good luck for the presentation and the conference. Thank you for the invitation.